The GDP report is tomorrow, 1 hour before the market opens. Are you ready and how can you prepare? What's going on, team? It's Ricky with TechBud Solutions here with a super quick stock market update. I want to make sure that every single one of you, even if you're a beginner and or experienced, that you guys are aware of what's in store for tomorrow. Tomorrow, we have a GDP report, which is the third estimate pretty much for Q3. That being said, what is the expectation? Let me go ahead and break it down for you. Again, if you learned something new, all we literally ask you to do is to drop a thumbs up on this channel and subscribe if you guys haven't done so already. I upload new videos every single day about the stock market. And if there's anything that we cover today that you have questions about, all you need to do is direct message me via Discord if it's trading related. And that's that first link in the description in this video. Or if you prefer to direct message me via Instagram, that's that third link in the description of this video. So again, 8:30 a.m. Eastern time, which means that at 5:30 a.m. Arizona or California time, the GDP report's going to be reported and the expectation is negative 0.6%. The prior month is negative 0.6%. Now, what does this mean exactly? How can I understand this a little bit more, right? I like to keep this simple. So what and why is the GDP important? Well, GDP is supposed to quarter over quarter tell us if our economy is growing or if it's slowing down. And a question you might have is, well, there's no question that our economy has been slowing down, right? The Federal Reserve is raising interest rates. Isn't that the whole reason on why they're raising interest rates? It's to slow down the economy, to bring down inflation. Yes. But just like we saw based off of our last CPI data report, core CPI came in hotter than expected. So just because the Federal Reserve is raising interest rates doesn't always mean that our overall economy is slowing down. Now, with the expectation of 0.6%, what does this mean? Well, if it comes in as expected, this will be the third consecutive quarter for 2022 that shows signs of decline. Now, why is that significant? Well, you can see that in the past couple of years, we haven't seen that. We did see back in early 2020 because of COVID that we saw 2 consecutive quarters of a decline. Now, why does that sound familiar? Oh yeah, it's because our president was asked a very simple question. And it's, well, doesn't 2 consecutive quarters suggest that we are in a recession? And just to keep it very simple, it says a recession is a significant, widespread, and prolonged downturn in economic activity. Sounds a little confusing, right? What's the technical term? Or what's the rule of thumb? A popular rule of thumb is that 2 consecutive quarters of decline for the GDP constitute a recession. That's pretty simple, right? Well, we did experience something like this back in 2020, and then guess what happened? We saw one of the biggest rises in our GDP after they pumped all those stimmy checks and printed money like there was no tomorrow, right? You guys remember all of that? Check that significant just push on our overall economy. And then for the next consecutive quarters, we saw a gain after gain after gain after gain after gain. And then finally in the first quarter of 2022, I'm much more of a visual learner. I'm sure that you appreciate this. This is Q1 of 2022. We saw a negative 1.6% on our GDP. And then we saw a negative 0.6% for the second quarter of our GDP. Now we are expecting another negative 0.6% is the market's expectation, as you can see right on over here. So GDP, negative 0.6%, that is the expectation. Now, if this comes in hotter than expected, you have to, it's not that it's a good or a bad thing. You need to understand what the government wants or what the Federal Reserve wants. It's 2 different things. Obviously, we as individuals, we probably don't want our overall GDP to slow down quarter over quarter, because at that point, it really just means that our economy is slowing down and no one ever wants that. But you have to understand that the Federal Reserve, the whole reason that they're raising interest rates is to slow down the economy, to apply pressure, right? To make it more difficult for growth. This is the only way that they can moderate and fight back inflation. Now, if they see that our GDP comes in worse than expected, meaning that it comes in hotter, meaning that the expectation is 0.6%, but maybe it comes in at 0.7 or 0.8. the individual might be like, oh no, this is worse than expected. But the Federal Reserve is like, finally, the way that we're raising interest rates aggressively is finally affecting the market. And that's all they want to see, right? If the whole point of you is to put out the fire and you see that the fire is only growing and spreading, I mean, at that point, you're only going to have to use more water. And that's the analogy that I want to give with this, is that the Federal Reserve is the firefighter and our economy is what's on fire. And we simply want to put down or put out that fire and or at least contain it and slow it down. And I think that's what I want you guys to understand, that if our GDP does come in worse than expected, then maybe this could encourage the Federal Reserve to take a less aggressive approach in which they choose to raise interest rates for the up and coming FOMC minutes meeting. Make sense? So I like to keep things super simple. I hope that my explanation today on the GDP report and why maybe higher than expected decline is maybe not the worst thing. And it's just, again, short-term pain for long-term gain. So I'm excited to see how the overall market reacts. I made $32,000 trading TQQQ today. If you missed this, go ahead and check it out. I actually caught at least $16,000 to $17,000 of my original gain within today's live trading session. It's literally the previous video as Jerome Powell spoke, and it's my previous video before this one. So you guys can feel free to check it out. $32,000 on the day. I'm excited to see how the market ends up performing tomorrow. And again, even if the market sells off, our job is to prepare for worst case scenario. So I'm ready to buy the dip if that is what is needed. So I really do appreciate you guys' time. Again, I will be trading live tomorrow right at market open with my Learn Plan Profit Group. We are running a significant sale today. It's $100 off, and you can join and watch me trade live as soon as tomorrow at market open. And again, that is that second link in the description of this video. So if you watched my live session today and you liked the ability to watch me trade live, imagine experiencing that every single day. That is exactly what my Learn Plan Profit Group gets to experience. And again, they are the only group that I work with on a closer basis. So again, if you want to watch me trade live as soon as tomorrow, click that second link down below, learn a little bit more about it, and see if it's a good fit for you. I hope that it earned your thumbs up. Please consider subscribing. Make sure that you subscribe, and I'll keep you guys up to date on what they end up reporting for the GDP report tomorrow. Like always, let's make sure that we end the year on a green note. Take it easy, team.